Welcome to Supercool, the show about low-carbon innovations now scaling. Each week, we talk with the founders, CEOs, and executives who are winning customers, growing revenue, and capturing market share by turning carbon-cutting ideas into competitive advantage. This is the rise of the low-carbon economy, a multi-trillion-dollar transformation already underway. I'm your host, Josh Dorfman. When most people think of serial entrepreneurs, we think of tech. People like Elon Musk, who co-founded or came early to PayPal, Tesla, SpaceX, Neuralink, and xAI. Or Jack Dorsey, who built Twitter, Square, and more. Or Richard Branson, who started Virgin-branded companies across music, travel, hotels, health, finance, and telecom. But almost none exist in banking. In fact, since the founding of the United States, only one person has ever started 3 banks from scratch. De novo, to use the industry's term. In that sense, Ken LaRoe stands alone in American history. Founding even one bank is a multi-year marathon. Charter approval from state or federal regulators, FDIC insurance application, raising $20 to $50 million or more in capital, recruiting a board and management team, building compliance, IT, and branch infrastructure from zero. Doing that 3 times with Florida Choice Bank in 1999, First Green Bank in 2009, and Climate First Bank in 2021, each with its own charter, mission, and investors, is unprecedented. So we have to ask why. Why would Ken LaRoe run himself through that ringer 3 times? The short answer is that it took him 3 tries to get it right. And by right, I don't mean building a bank for a successful exit. Ken's first 2 banks were both acquired, and he and his investors were rewarded. The problem Ken set out to solve with bank number 3 goes beyond financial success. He wanted to build a financial institution with a mission to address climate change, to run directly against the grain of the global banking industry. Earlier this month, for example, the Net Zero Banking Alliance, once made up of the world's largest banks, shut down after one after another quit over the past year, and as they continue their practice of lending using customer deposits to finance fossil fuel companies. Climate First Bank takes a different tack. It channels deposits into clean energy, solar, battery storage, and projects in underrepresented communities. Of all the choices individuals and business owners make, none may have a greater planetary impact than where we park our capital. As for me, I bank Supercool through Wells Fargo, and I keep my personal accounts with USAA. I'm as tied to the mainstream as just about anybody else. But after talking with Ken, I'm rethinking that, because what he's building is so credible and powerful. Today's episode digs into why Ken started Climate First Bank, what went wrong with First Green Bank, which was also values-driven, that led him to come out of retirement and do it again. Climate First Bank is on a rocket ship trajectory. Since the Great Recession, it's become the fastest growing newly launched bank in the United States, surpassing $1 billion in assets. It's already one of America's top solar loan providers and is now eyeing an IPO within the next 2 years. Ken is CEO of Climate First Bancorp, the holding company overseeing both the bank and its subsidiary, OneEthos, a fintech that partners with Climate First Bank to deliver ethical, affordable solar financing to communities and homeowners. It's how the bank has built its loan portfolio without relying on federal incentives to make the math work. This is a new paradigm in banking and a new path forward for clean energy. And while $1 billion plus in assets is impressive, Ken knows it's just a drop in the bucket. What matters is charting a model that can scale its mission indefinitely, banking for a world that's clean, affordable, and abundant. Here's my conversation with Ken. Ken, welcome to Supercool.
Thank you so much for having me.
I'm glad you're glad. It'd be awful if you weren't. It'd be like, oh, geez, I gotta talk to this guy for an hour. Good grief. I've been wanting to talk to you pretty much since we started working on Supercool about a year ago. So aware of what you're doing with Climate First Bank and the larger company Climate First Bank Core, the different components of how you're working on your mission. You talk about Climate First Bank as an N of one, the only FDIC-insured digital community bank founded to combat the climate crisis. This is your 3rd bank that you've founded and built, and that in itself is really fascinating to me, that someone actually wants to start 3 banks. Seems like you've figured a lot out the way you want to do it this time versus some of the earliest, put some of the guardrails in place and really think through how do you drive long-term impact. So let's just use that as a starting point for you to tell us a little bit about your background, what that journey has looked like. We'll unpack it along the way, but give us a little sense of who you are and where you are today and where the business may be.
You touched on a lot of it. So I started my first bank in '99, and it was a traditional Florida start it, scale it, exit it, hopefully make a bunch of people a bunch of money and move on. And we accomplished all that. And we sold in 2006, which was like, oh my God, I wish it was prescience or brilliance that drove me to do it because then I could replicate it. But it was blind luck to sell before that meltdown. And my wife and I got a mini motorhome and we circumnavigated the country. And before we left, my brother gave me Yvon Chouinard's autobiography, Let My People Go Surfing. You know, he's the guy that started Patagonia. And I read it and it was like, oh my God, this is the answer. I've got to do something with the rest of my life rather than just make a bunch of people a bunch of money. I want to make a bunch of people a bunch of money and do something that gives back. And my best friend came up with the name First Green Bank, and my wife designed the logo, and I actually started working on the business plan on that trip and got back. We filed the application, would have been 2007, third quarter, I think, of 2007, and the regulators just stonewalled, did not want to hear anything about a new bank opening in 2008. And we literally thought we were not going to get the charter. And I think they just figured there was no reason they could turn us down. I had raised a bunch of money. We did everything right. I'd done it before. So they finally granted the charter. We opened in February of 2009, right at the bottom of the trough. And then they changed all the rules on new startup banks and put us under a 7-year period of heightened scrutiny and limited our growth, which was not, of course, anything we signed up for or that our shareholders signed up for. So we just ground it out, and in about 2016, 2017, my shareholders were getting really antsy, rightfully so. They'd been in it almost 10 years. They were all happy that their 401ks that turned into 201ks had actually come back to 401ks, and our stock was valuable. And we sold in 2018. It was a nice return, financially rewarding for the shareholders, but it was totally unrewarding for me, the whole thing. And they said they were going to continue the values proposition. Of course, didn't continue any of it. So my wife and I got another mini motorhome. We circumnavigated the country again, and every morning I'd get up and go, I'm going to start another bank. I've got to do it. I got unfinished business. We got to do it. Then by nightfall, it's like, oh my God, I can't do this. I'm too old. It's too hard. And it is really hard, apropos to your comment about why anybody would want to do it 3 times. And I'm really working with my therapist on that, but I haven't come to the conclusion yet, other than I've got ADHD, and that contributes to it. So we did that. It continued for about 6 weeks, and finally Cindy said, look, we're going to turn this thing around. We're going to go home. I'm going to divorce you because you're not the guy I married. You know you've got it in you. You need to start another bank, and we're going to call it Climate First Bank. And I said, okay, but why that? That feels very divisive in this polarized environment we live in. She said, exactly. We got to wear it on our sleeves, be in your face, no compromise. And it was the best business decision we ever made. So she came up with the name, she came up with the logo, and I started working on the business plan on that trip. And then when I filed the application, which is a giant, like 60-page thing, the regulators welcomed me with open arms, the state regulators and the FDIC. It was the coolest thing ever. Comments like, oh, Ken, we're so glad you're back. We love your mission. At First Green, it was like, oh, this is a niche bank and we don't do niche banks. And then compared to this last go around 4.5 or 5 years ago-ish. So that's kind of the history, the historical foundation.
Awesome. So you came back, you filed the application. Now the regulators say, welcome, glad you're back, Ken, and probably like, hey, we know this guy. There's a trust level. And I mean, I don't know the intricacies of launching a bank, but I would imagine that personal trust and probably relationships and history in the industry, I can imagine, is only helpful.
It's big. It's huge. Yeah.
And I was actually going to wait to ask you this later in the show, and I don't want to get derailed by it, but you're headquartered in Florida with, you said you're wearing on your sleeve, Climate First Bank. So even just for you to say the regulators welcomed us, I'm just frankly a little bit surprised to hear that. And maybe the question is, because you are wearing the bank on your sleeve. And we're going to get into like what makes this bank amazing and how fast it's growing. And that growth story is really incredible. But does being climate first bank, I imagine it welcomes all sorts of attention. Or maybe there's unwelcome attention and maybe welcome attention, and maybe even the unwelcome attention is welcome in some way if it just raises the profile of the bank. How does that dynamic play out?
It's been playing out, as you can imagine. Of course, the welcome back was 4.5 years ago. Right. There's a lot that's happened in 4.5 years. All our people at the state level are now gone and have been replaced with other people. All our people at the FDIC are now gone and replaced with other people. The Federal Reserve, we've still got pretty much our same crew, which is nice. So hopefully that stays stable. We haven't had any adverse stuff from the state or the feds, and I hope it doesn't happen. And at this point, all I can do is hope, I guess. But it's pretty weird, especially with the Florida anti-ESG law they passed, totally in conflict with their other laws and totally in conflict with federal law. But I guess none of that really matters nowadays. But to go full circle, has that benefited us? And probably so. And then we have had negative stuff happen, like Oklahoma passed a bill that, I don't know if it was a bill or if it was an order from the CFO or whatever. They wouldn't do business with people that were antithetical, and they named BlackRock, Chase, Citi, Climate First. And it's like, are you kidding me? We're in the same group with BlackRock and Chase and Citi. Oh my God, we've arrived. It's like, really? The state of Oklahoma, you're not going to do business with us? Were you planning on doing business with us? So we have had some of that, and it's caused a lot of chuckles and a lot of positive feedback. All PR is good at the end of the day.
Yeah, when you're wearing it on your sleeve and you have this really clear mission. And one thing, Ken, I think the reason why I was so excited to get an opportunity to talk to you and understand the Climate First Bank business a little better is because going back, I mentioned briefly before we got on the call, we used to have this brand, Aaron and I did, the Lazy Environmentalist, more consumer driven. What can you do? And if I'm on someone else's podcast today, invariably, regardless if I'm talking about Supercool and business to business and here's the cool company, invariably a host is going to say, well, what can we do in our personal lives? And what comes to mind now for me that feels really compelling and interesting is to say, look, if you're just banking normally, any mainstream institution where you've got your checking and savings account, you're underwriting fossil fuels. Like whether you want to or not, you just don't know. But that's what's happening. There is an alternative now that actually puts their dollars into things. Whether you are super proactive and you are a totally committed climate warrior or activist or whatever, or you just want to sleep a little better at night knowing that your dollars are going towards a future you want more than the continuance of reliance on fossil fuels, you can switch your bank. And that's being made really easy. And not only can you switch, the value proposition that Climate First Bank offers in terms of whether that's a high yield on your savings account or just the opportunity around commercial banking. Having been in this industry broadly for 2 decades, I've seen other banks that have a mission and can kind of align your dollars. But rarely have I seen it as robust as it is already for kind of commercial banking. If I'm a company and I want to bank somewhere that's really aligned with my values, and I know you're working on extending that in structured financing and maybe other tools and opportunities down the road. I just find that so compelling and exciting as I look at your business. Presumably that's what you were getting really excited about and got you to come back and give it a go for a third time.
It is, and it's really quite amazing to me when I think about where we are and how far we've gotten in such a short period of time. And I heard a country western star one time described as a 30-year overnight sensation, and people say, well, what do you attribute this to? And it's like, oh my God, I don't know, it's multifactorial, but is it the 30-year overnight sensation? Is it 3 times the charm? Is it just the good timing? But whatever, it is certainly working. And I personally did not know the power and value of where you put your money until the very end of the last bank. One of my mentors, Vince Siciliano from New Resource Bank in California, used to always say, you got to know where your money sleeps at night. And he was saying that 15 years ago, but I didn't really know the impact other than that there was an impact. There's this fellow named Paul Moynester, and his nonprofit he started is called Topo Finance, and he's done deep research and a lot of interviewing top people in top companies like Google and the giants to ascertain what their carbon footprint is and then relating it to dollars. And it's astounding. It is completely astounding. Like if you take $4,000 out of a, I'm not going to call them names, but systemically significant big bank, and you put it in a values aligned bank, it's the equivalent of changing your entire diet to vegan. $4,000. That's all. If you switch $100,000, it's equivalent to 100 cross-country airline flights. It's not just a little bit, it's huge. And even the household that has a $5,000 average balance in their checking account can make a difference. And I've told my daughter, you need to be banking with us and not Bank of America that you've been with forever. It's a huge personal impact, more than people can do with almost anything else they do in life.
Right. And the thing of it is, you're not asking anyone to change anything else. You're not asking them to change anything about how they live, right? Like your life is exactly the same. It's just you have this lever, right? You have this cash that actually is a lever that you go on, you're living your life exactly the same. This is literally a very simple switch that unlocks all this impact. And we're going to talk about the impact and the focus of the company. I know there's a number of different places where you're investing dollars or you're lending dollars. So let me say a few things. I know that what I can see from the outside, Climate First Bank is now, I think you have, the last I read, something like $1.3 billion in assets.
Yeah. We're about 1.4 now.
And a portfolio of solar projects and loans that is growing a couple $100 million in 2024, and doing it without having to rely on tax incentives and some of those mechanics, and still getting to a place where those loans are very appealing and very attractive. I want to get to the technology that's unlocking the value proposition, because I do find that really interesting as well. But talk to us about the impact that the bank is having. You may be the fastest growing bank or one of the fastest growing banks since the Great Recession, and with this really interesting point of view on where you put your customers' cash.
From the data we can find, now, it's a little bit hard to compile, but we think we're the fastest growing new bank charter in America since 2009. And fast growing scares the regulators to death. So it's back to your previous comment about having a relationship and showing them the robust underwriting we do and the robust due diligence and enterprise risk elements we have put in place. Another historical precedent or whatever. With the last bank, we started doing consumer solar lending in 2009. It was pretty much unheard of in the country. And we pioneered it, and we tweaked it and tweaked it and tweaked it. We were getting no uptake. And then finally we got it to the point where people started doing it. But it was the old school. You come in, you fill out a paper application, hand it to the branch manager. It takes 2 weeks to get an answer, then another week to get your documents, And by the time we sold, we had $10 million total in that portfolio over almost 10 years. Well, about the time we were selling, somebody in fintech world figured out the way this needs to be happening is the installers need to be able to walk into mom and dad's house and sit at the dinner table and get an application submitted, get it approved, and get that contract signed right then, or they couldn't close the sale. And the only way to do that is with a fully digitized system. So they launched, the solar installations took off, but they're a complete den of thieves. They charge undisclosed dealer fees, Wall Street things. They were charging during the low period 1.9% interest. Nobody on Wall Street sits still for 1.9% interest. So we could not get the answer. Nobody would tell us. Well, we come to find out they make all the installers sign non-disclosure agreements and all kinds of shenanigans. They were charging at the time 22 to 30% dealer fees. So the dealer was marking up the cost of the array, not disclosing it to the consumer. The consumer just thought that's what it cost, but all that skim was going to the financiers. They're now charging up to 50%, but they're going bankrupt right and left because something like 14 state AGs have sued them for fraud and everything else, and there's a bunch of private class actions. So most of our competitors are going away, thank goodness. Part of our thing when we started the bank was to break their backs, break the backs of the bad actors. Well, I guess we contributed to it. It happened, thank goodness. So when we started the bank, it was, we have to have a digital product. And our core processing system that we signed with said, yeah, we can do it, no problem. And of course, we signed with them. I've determined that if a software salesperson's mouth is moving and sound's coming out, they're lying. We got open, got started, found out their system wouldn't work at all. And my CTO called me and our president, who's now the CEO, Lex Ford, and said, "Hey, can you guys do a Teams meeting?" I said, "When?" He said, "Well, right now." "Oh, sure, yeah." And so he says, "Can I take the screen over?" "Yeah, take it." And he pops up this thing that's a cell phone and a picture, and he starts scrolling through. I said, "What are you doing?" He said, "I'm showing you our new fully digitized loan application process for solar, consumer solar." I said, "Where did you get that?" And he said, "Well, I wrote it." And I said, "When?" He said, "Well, the last 5 weekends." So he wrote all the proprietary code for our product, and we had done about 800,000 the first year we were in business. The first month we launched with his product, I think we did 5 million, and we are now doing over 30 million a month. Again, it's hard to tell with the statistics that are out there with the other fintechs filing bankruptcy, but we think we're fourth in the country now for financing consumer solar. We don't require the tax credits. The fintechs required you to apply the tax credit by a certain date or the rate goes up on your deal. Well, some people don't even get the tax credit, and they certainly aren't disclosing it. So we don't even build it in at all. And we tell our consumers, if you get one, you can buy a boat. We don't care. You don't have to apply it to the loan. So that's another thing we did different.
Wow. And so what was that switch then when you introduced this tool? What drove that kind of immediate growth and sustained growth? Is that being able to go to installers with a different offer for them to be able to take to their customers?
It was a huge process. It took forever because a lot of the installers, I mean, they just get in a rut. And, the salespeople, well, if I send it to Sunrun or I send it to Mosaic, I know I'll get an answer and I'll close at the dinner table. So it was convincing them we could do it. And my CTO, who's now the CEO of our fintech, he wrote all the code for a B2B portal for the installers also. So they can go in and track the status of each deal. I think we have 720 installers on the portal now and thousands of their salespeople and all that. So that's the deal flow is through the installers. That's the question I think you were asking. So once they knew that it worked, there was no scum, they could be honest with the consumer. It's taken a while, but we're there now. We get deals out of probably 14 or 17 states right now. And then there's some states there's hardly anything going on, and then there's some states we just haven't cracked yet.
So we start this conversation, we're talking about Climate First Bank. For our audience, if you go onto the Climate First Bank website, if you want to do personal banking or business banking, you're going to see pretty much like a normal bank. It's just it has this different mission and your money's going in a different place. And also really competitive, very attractive savings rates, et cetera. And it's a strong value proposition just in the product itself. But what's so interesting to think about how you run this organization. So you have Climate First Bank. Lex, you mentioned, is now the CEO of Climate First Bank. You're the CEO of Climate First Bank Core, which also has the fintech OneEthos, which you and your team developed to be able to streamline the financing, underwriting, approval process for loans so that solar can actually happen in a much more transparent, actually like working the way everyone thinks it's happening, but with removing a lot of the shady dealings that have really hampered the solar industry. And everyone who had such high hopes for solar, and suddenly you hear about Solar Bros, this whole thing going on that's so shady, and it just was so disheartening. So OneEthos helps get rid of that. So you've got Climate First Bank, you have this really awesome value prop, but then you've built the back end that actually says, hey, this is actually the way we're going to go be super efficient about how we invest the dollars we're entrusted through the bank into clean energy in a way where we're going to be able to drive return, but also make that really affordable and fulfill our mission overall. That's just a very interesting kind of two-sided business, I think, that I wouldn't necessarily intuitively understand just looking at a bank to understand what's going on the back end for you to fulfill that mission.
Yeah, and just the way you worded it makes it sound like it was completely intentional and I had the plan, and I wish that was the case. Again, if it was brilliance or prescience, I might have done this 15 years ago. But a lot of it was just learning and reacting and being flexible on the fly and having an incredible CTO turned CEO. And Marcio de Oliveira is my guy, and he actually approached me to come work for us. And so that's kind of like dying and going to heaven. And when we struck a deal, it was like, my God, where have you been all my life? And then he goes and writes all this code over a couple of weeks, and he's now purchased two other tech companies, and we've just signed an agreement to purchase the third. And we have, I think it's three regular engineers, one AI engineer, himself, and our CTO of OneEthos is a brilliant engineer on his own right. But Marcio's got 5 patents in banking software. So he understands all the compliance, all the regulatory, Malo, everything. It's an amazing, maybe fortuitous thing, but it was in the business plan. I just wasn't quite sure how I was going to get there. And you, as a former CEO, you probably run into those situations where you knew I knew what we needed to do to the point of having it in writing and being approved by the regulators, but I wasn't quite sure how we got there or where to get there.
Yeah. But I think that, one of the things that we see regularly in our conversations with founders, with CEOs, companies of different sizes, is that the adoption comes, that rapid growth that you're experiencing with OneEthos and Climate First Bank. Most companies, it doesn't matter what industry you're in, you still have to figure out basically the same set of things, right? How do we remove friction? How do we make this really credible? Can we use financing in some creative way as an unlock here to actually fulfill our mission, which, it's your industry, but really you're doing it differently, how you're growing this bank because you have the fintech on the back end. That's what I see. That's what we were able to do with Planted in my last company. But whether we're talking to like Mary Powell at Sunrun, who's been on the show, or we just had this company on Cambium that's figuring out how to take the very fragmented national, it's not even really a supply chain, they're building a supply chain for trees that fall in cities. It's like 36 million trees. It's like half the trees that the industry consumes a year, and build infrastructure around that so sawmills and everybody wants to get on their system. It's the same playbook, right? It's just
that's actually happening. Oh my God, I've been thinking every time I go to my place in North Carolina and there's all those trees in the Smoky Mountains National Park that are falling down. It's like somebody needs to do something with these.
They're doing it, man. It's an amazing business. Yeah, it's called Cambium. Yeah, they're building out the software to actually connect this whole infrastructure nationally. The truckers, the sawmills, they work with Room and Board, big furniture companies. I think they do some work with Amazon. Just so interesting. But when you talk to Ben, who runs that company, he'll tell you the same thing. It's like, yeah, we just really had to figure out how to actually, we still have to get that tree to wherever it needs to go cheaper and faster, and then the end product, how it gets milled, has to be better than what someone's buying today. The climate, saving the trees, everybody loves that, but it only is going to move from a niche to mainstream to the degree that the business case works for everybody on that value chain. And that seems like the same thing in your industry.
Yep. 100%. Well, it should be across all industries. And I was at a talk somewhere I'd asked to give in person. This was 10 years ago. And I said, I'm a rabid environmentalist. And that's all I was going to say was I'm a rabid environmentalist. That's what drives me. And then I saw people out in the audience frowning and shooting birds. And I said, but I'm a rabid capitalist also. I believe the two have to go hand in hand, or we're not going to solve the environmental issues. If there's not a business case, especially in what used to be a capitalist democracy, the U.S., and I've been called everything, you can be called, from a liberal idiot to tree hugger or whatever, and that's not going to ever succeed, that environmental thing in a bank. And then I say, okay, well, we'll just kick your ass financially, and we do. And we're in the top 10% of banks in Florida in financial performance. So nobody can say, well, yeah, you're giving up financial performance, because we're actually better than everybody else.
Here's what I want to understand. I think just to kind of go back to First Green to today, Climate First Bank. I read recently, I think it was in Barron's, I think it was reported maybe a little more widely than that, but Barron's ran a story that your company recently retained some bankers to start exploring a potential IPO maybe in 2026, 2027. And very few banks actually go that path. And I think I saw some statistic of the 16,000 banks that have been founded over the last almost probably 40 some odd years, maybe something like 200 actually go the public markets route. And I get at least I get some of the story, as I said, kind of wanted to reference back to your prior bank where you built this wonderful business, sold it, and then the company that acquired it didn't share the same ethos, and suddenly everything you'd built and trying to accomplish around the values, you no longer had control over it, and hence to come back, let's do it again. And your wife saying, you either do this or like we're gonna have some marital issues. So I imagine the view of, hey, we're going to take this thing all the way, or we're at least going to control our destiny much further into the future. And the way that we do that is we have to, instead of looking to get acquired, we're going to go public ourselves. Is that the animating driver? I assume that the business has to be in a certain financial position now, just knowing that it's become harder and harder to actually go public and jump through all those hoops. What really is driving that decision?
That probably was the foundational bedrock to do it, because we've viewed it as the way to go into perpetuity. And you would think I'd know as a multiple bank entrepreneur the stats on going public, but I did not know till that Barron's article. And that reporter is just incredible and really knows what they're talking about. But yeah, it was something like 1%, 2%. Thank goodness I didn't know, I guess. But hostile takeovers in banking are very rare, my attorney tells me. So the possibility of us losing it to that kind of thing is slim. Now, we will have public market scrutiny, which is fine. It'll probably just embellish our values proposition or make us sharpen it even more. But the other reasons for going public are, which we didn't get into, but I'll briefly touch on, raise capital. We've raised $125 million in 3 rounds since we started the bank. I mean, it's an astounding amount of capital and an astounding amount of work, but we're $1.4 billion in assets, so we're at that 10-to-1 ratio for the regulations again. We need to raise more capital and we need to be publicly traded, so with capital raises after that, subsequent, will be easier. We want to have publicly traded currency so we can do M&A. And then another primary reason is I want to be able to give my shareholders liquidity, and that'll take a bunch of the pressure off the table. When I started the bank, I was thinking, well, as a baby boomer, what do I want in my investments? Cash flow and liquidity. And then I thought, oh my God, that's what my millennial daughter wants, is cash flow and liquidity. So we need to provide cash flow and liquidity. So going public is the first step.
Awesome. I want to come back to something else that you wrote in your shareholder letter for 2024, where you had said one of the unique characteristics of Climate First is our commitment to innovation and what I like to call our maniacal pursuit of efficiency. And I just want to touch on that because I also wanted to understand the operator playbook that's going on within the company. With $1.3 billion under assets, I think it was in Barron's or maybe it was in your shareholder letter that said you're able to generate $4 million more assets under management than the typical bank. I think it was like $11 million per employee at Climate First versus maybe the industry average, and kind of a testament to efficiency, technology enablement, the playbook you're running as a digital first bank. Can you share some insight there into what that looks like in practice?
It's changed dramatically since that was written. We're even more lopsided compared to the industry. There's a stat the industry uses called the efficiency ratio, and it's basically your cost per dollar of revenue. There's 80 some banks in Florida. We're probably number 5 in the state with efficiency, and it's going down every month as we make significantly more money. But there's a couple things that play into that. We opened June 1st of 2021, so right in the height of COVID. So we call ourselves COVID informed. And when we were opening, it was weird because the regulators were saying things like, well, are you going to put up those screen things at the tellers? And we're saying, I don't know, are we going to be even open? Nobody knew anything. We have about 130 employees with both companies, and only about 10 of them work in buildings. So we're all remote, we're all over the country. There's really big efficiencies to that. There's inefficiencies. You know, it's hard to tell if somebody is really giving it their all until it's, until there's a lot of money wasted. But the people that give their all, I mean, they just stand out because, they're sitting out there by themselves somewhere cranking away. And then the technology, I mean, we're not shy about AI, investigating every angle, everything that can create efficiencies. And the digital platform, especially on the solar side, well, we call it our digital bank. And our digital bank has far more deposits than any of our physical branches. They're doing 30 million a month in solar production, and they do it with a leader, a manager, and I think 4 people.
Very lean.
It's like 250 million in deposits, 30 million a month in loan production with hardly any people. I mean, we could literally not have physical branches and probably be doing almost as well.
Yeah. Here's the thing that's interesting to me about that, because when I look at OneEthos and who the ideal target market is, or target customer, let's say, or at least who you say it's for, and it's other CDFIs, smaller banks, just the way that you operate, that your company operates, really does seem like it's creating a playbook for other types of mission-driven organizations, whether they're climate or adjacent or what have you, to say, oh, here's actually how we could do this and how we could be national and how we could get to scale to the degree that they have insight into what's going on within the company. But being so technology enabled, to me, it's this combination of, if I go on your website or we're having this conversation, I hear the values you're championing. Like you said, you're a rabid environmentalist, but also a rabid capitalist. It's the combination that actually ultimately creates this impact. But it's this playbook that is just, the execution is probably what I'm keying into, what a very small team can achieve. And I want to give you a chance to react to that, but I also want to layer on one more piece, which is, I know that Climate First Bank also regularly wins awards for the culture and being a great place to work, and yet you're running predominantly a virtual workplace, which is also very interesting to me. So that esprit de corps, that probably buying into the mission, and yet everything else you're doing to attract and retain top talent, I'm guessing that all has to play into how you see creating a competitive advantage in the marketplace, or some edge that enables you to fulfill your mission. I know that's a lot, so let me pause there, but I'm curious if that lands with you, if that has resonance.
Yes, so the playbook idea, my dream with First Green was to build a values-based bank owner's manual, if you will, or operator's manual, and be able to hand it out to other banks and them convert, because it's going to take big effort, of course, to save the planet. And all I would get from my cohorts was, oh, Kenny, we're so proud of you, we're so proud of what you're doing. It's like, okay, Tom, well, why don't you just do it with your bank? Well, shareholders, customers, it just would never work for us. So I got no takers. Fortunately for the Global Alliance for Banking on Values, the nonprofit that's founded in the Netherlands, we now have, I think, 14 values-based banks in America, financial institutions. There's some credit unions thrown in there, and they all do live, eat, sleep, and breathe that values proposition. Most of them are not in the climate space, though, so we have been a real resource for them, like Southern Bank in Little Rock, Arkansas. They're really focused on alleviating poverty in the Mississippi Delta. But they haven't gotten heavily into environmental, and the CEOs come to me and said, hey, will you help us? Well, heck yeah, we'll help. So I guess, we should write a book on the operating system because it is an operating system, and then we borrow pieces from other places like Jim Collins' Good to Great or Traction, Entrepreneurial Operating System. And I think the remote work helps culture because there's not a coffee pot, there's not a water cooler, so there's no place for the brotherhood of the miserable to stand and bitch. So I think that's the positive. The negative is we don't get together in person very often. And our values proposition draws incredible talent. And I get it over and over. I was on the phone yesterday for a long time with a fellow that's interested in joining us, and he said, I was prepared to get out of banking because I'm tired of the conservative attitude in banks, and then I found you guys. We may get the guy, and we may save him to where he stays in banking where he can make a big difference just because of our values proposition. And that to me is really cool.
That is really cool. You had talked about going back now a number of years, but your first road trip after selling your first company and getting hold of Let My People Go Surfing by Yvon Chouinard. I found that really interesting because in my journey back in 2004, I was starting my first company, which became a modern design furniture company. And I was out at a conference in LA, bootstrapping this thing, and I heard Michael Crook, who was then the CEO of Patagonia, talking at a luncheon. Okay, Michael's up there, he's talking, but no one's really paying too much attention. They're chatting, and he's talking about Patagonia, and he says, last year our fleece content was something like 80% recycled poly. This year it's 64. We're failing as a company. And then every fork and knife drops, right? They're like, what? And what's he talking about? And he's like, look, are we better than everybody else? Yes. But are we meeting our own standard? No. And most importantly, as a values-driven company, we have a responsibility to be transparent with our customer because that's the expectation that they have of us. And when we do that, when we also acknowledge that we're not where we want to be, but we have the roadmap for how we're going to get there, actually it's really good for business. It's an opportunity that trust level comes back up. And for me, I'd started that company. Early on, my first employee was leaving. I was moving the company to Brooklyn from Washington, D.C. There were some really great designers there. And on her last day working for me, it's a way longer story, but she took the opportunity to lay into me for being what she felt was a terrible environmentalist. And she's like, look, you're not my boss anymore. You're selling all this eco stuff, but like you're always in the shower. You barely recycle. You're a jerk. I've been working for you for a year and a half, and you're a giant hypocrite. And it kept going, it kept going, it kept going, it kept going. And she was totally right. So I remembered Michael Crook in Patagonia, and I wrote this little blog entry called The Lazy Environmentalist about myself owning all of my less than stellar behavior. And that then sparked, became a book and then a radio show and then a TV show, and this little kernel of just like being authentic and transparent just unleashed so much. And I think about Patagonia and what it did for me, just the influence, and I think about the book and what it's done for you, and I just found that a very interesting kind of kernel comes from Yvon Chouinard and what they've built there. And as I think about it for Climate First Bancorp, the bank, OneEthos, the whole thing, taking it public, all the business logic. We're going to return capital to our shareholders. We're going to be able to raise capital. But yet, you also said this is the ability to pursue the mission in perpetuity. And that's a very Yvon Chouinard kind of thing to say.
Going way back to when I first read it, it started the journey of, well, how do I do this into perpetuity? And we investigated every rock we could turn over to try to figure out how to do that, whether it was doing a reverse stock split, going public, doing an ESOP, and for whatever reason, none of them would work. And like Yvon Chouinard started the company, bootstrapped it, and was 100%, his family 100% owner. He could do whatever he wanted, including donating it to a nonprofit, which he's done to allow it to go into perpetuity. Well, we can't do that. And Tom Steyer and Kat Taylor did with their bank, Beneficial State. It's a legal structure with a foundation ownership, the same reason, go into perpetuity. So maybe this experiment will offer another alternative, hopefully, to other companies that are values-based, that have a lot of shareholders like us, that take a lot of money to start. I mean, there's just not that many people out there that can write a $125 million check to start a bank and grow it to $1.4 billion. So maybe it will be I just thought of that. So you just inspired me. So
yeah, no, and I appreciate that perspective that you're sharing. So I'm glad that that's where we were able to get to.
Yeah, you totally inspired me. It's like, now that's the next step of inspiration from Let My People Go Surfing. And I'm halfway through the new book that was just released, the biography, Dirtbag Billionaire is the name of the book. And I'm about halfway through it, and it's rekindling all this stuff. So what you just said kind of layers in.
That's awesome. And thank you. This is a great place to end it on because we've covered so much, and now, we'll have to follow the continuation of the journey. Thank you for your time. Thank you for speaking with me today. Really appreciate it.
Absolutely. Yeah. Anytime, feel free to just reach out and we'll chat.
Thanks so much for listening to my conversation with Ken. If you enjoyed it and appreciate the perspective Supercool brings to the business and climate conversation, please take a moment to subscribe and leave us a review. It's the best way you can help us reach others who would benefit from these conversations too. See you next time.